You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. The futures markets can be downright scary. Limit up, limit down. What the heck is RBOB anyway? Are they going to dump a truckload of soybeans on your front lawn if you click the wrong button? Come to think of it, maybe you should just stick to your comfort zone. Or you can break out of it with the Futures Rundown. The Futures Rundown is here to help you make sense of these scary markets. We'll analyze all the top futures trading activity, explore the ins and outs of your favorite products, explain exactly how futures work, and hear from leading experts in the futures markets. We'll even tackle all of your wildest futures trading questions. If it involves futures, then you'll hear about it on the Futures Rundown. The Futures Rundown is brought to you by T4 Futures and Options. Elevate your trading experience with the T4 Futures and Options trading platform. Whether you prefer desktop or mobile applications, T4 delivers low latency and professional-grade functionality for both traders and brokers. Take advantage of theoretical sheets, strategy solver, MBO, advanced charts, and a suite of powerful features to enhance your trading strategy. Visit ctsfutures.com or search for T4 Futures and Options on Google to register and get a free month. And now, it's time to break into the futures markets. It's time for the Futures Rundown.
All right, everybody. That music means we are back. It is Wednesday. Time to unleash the beast. That is the Futures Rundown. My name, of course, Mark Longo from theoptionsinsider.com, as well as on the network upon which so many of you folks are mainline. I hope you're having a good trading week. Hope you had a good week last week with the holiday there. If you're in the U.S., of course, if you're outside the U.S., then I hope you just had a great trading week nonetheless. But now we are back live here on the Futures Rundown and raring to go. A couple things to remind you of at the top of the show. First off, if you're not listening to the full network, man, you're missing out. Make sure you are doing so. B, if you want to go above and beyond, you want to get an exclusive podcast feed just for you with a couple of extra shows out there, live streams, giveaways, all sorts of fun. theoptionsinsider.com/pro is the place to go to learn more. As we learn who's joining us on the old program today, I am pleased to welcome back our old pal, Mr. Rich Excell from the University of Illinois, now holding court as the director of the Derivatives and Trading Academy. Mr. Rich, welcome back to the Futures Rundown, sir.
Mark, thanks for having me. It's always fun to be on here, and like you said at the top of the pod, that you have tons of great content, and then I think people should definitely be engaging in all your different content. But this one is always fun for me as well to talk about futures markets and talk about what's going on. There's been a lot going on for sure, so I'm sure we're going to have a good podcast today.
How are things at the Academy these days, aka the Hogwarts for derivatives traders?
Yes, exactly.
What's the Hogwarts
for traders? It's been great, actually. A lot of people at the start of the semester that didn't really know what a derivative was or an option was, and now we've got them, trading option strategies on corn, soybeans, oil, gold. I mean, they've fallen in love with oil and gold markets this semester. So it's kind of fun to get them thinking about markets and ideas outside of just kind of the mainstream, where they're kind of, everyone else is just always just focused on NVIDIA. And so there's a whole world out there to trade.
So if it's the Hogwarts, then who teaches the defense against the dark arts of derivatives? Is that you? Is that your job?
That is my job. I show them the first day of class. I show them the scene, or the opening scene from Terminator 2. I tell them it's their job to learn to be John Connor and take on the machines. And so that's I guess that would make me the defensive against the dark arts teacher.
I like it. Feel free to run with that branding all you want over there at the Academy. As we keep on rolling, listeners, right on into the Trading Pit.
It's time to break down all the action that's lighting up the futures markets this week. What's limit up and what's crashing and burning? Let's find out. It's time to enter the Trading Pit.
All right, everybody, welcome to the Trading Pit, the portion of the show where we break down what's lighting up the futures markets this week. And before we get there, really quickly, Rich, we haven't chatted with you since back on October 9th, so it's been nearly 2 months here on the network. And of course, a lot has gone on in the intervening period. Most importantly, there was a big election about almost exactly a month ago, December 4th, as we're recording this now. So crazy how time flies. It seems like we were just doing our epic election night spectacular. If you haven't listened to that yet, listeners, check it out. 4 hours of awesome goodness, if I do say so myself. A variety of guests from throughout the globe joined us to chat about all things markets. That was certainly a fascinating time over there. But Rich, like we said, a lot has gone on since the last time we chatted with you. Let's start there. What are your thoughts on how these markets have performed heading into and now coming out of the election?
Yeah, for sure. I mean, some massive moves we've seen. Some really interesting stuff that's going on. I mean, some things that aren't, that maybe shouldn't be surprised given the outcome of the election. Seeing a big rally in crypto, we knew that could be the case if Trump won. Probably the magnitude of that move, though, caught me a little bit by surprise. Certainly, we're kind of gone with like a hot knife through butter from 70,000 to almost 100,000 here. But I think more interesting is we'll kind of maybe talk about what's going on this week. It's starting to see some of that now starting to flow, that momentum flowing into things like the altcoins and Ether, et cetera. Equity rallies after the election. I think all the negative. I think almost in some ways, regardless of who won, you're going to see an equity relief rally because now almost all the negative macro catalysts are out of the way, and they kind of Q4 seasonality, which is always pretty positive for equities, particularly when they're already having a good year. It should be a little bit expected to see a continuation of that move, which we have very, very strong November month. I may be the beneficiary, though, of the outcome in the election was small caps, which had an astounding month in November, up almost 11% in the month and starting to catch a bid relative to large caps, which they haven't for quite some time. Maybe an outlook and a hope for lower taxes, lower rates, and lower regulation, perhaps. So those are some of the things that are out there. I also think some moves that maybe aren't that surprising. You're seeing a little bit of pressure on ags, right? That's been a tough year all year long in the ag futures markets, but with concerns of tariffs on major trading partners and seeing that corn and soybeans in particular tend to bear the brunt of that from a retaliatory nature, that market just can't seem to catch a break in a lot of ways. I guess the biggest surprise for me in terms of bigger moves directionally is the strength of the dollar. I kind of got that a little bit initially because we saw the 10-year Treasury yields moving up so much higher after the September FOMC and had rallied pretty sharply into the election, but yields have come off now a bit, especially after the Treasury Secretary nominee, and so yields are up a little bit, but I mean, they're actually off since the election, and still to see some continued strength in the dollar is surprising to me because, I mean, we look at the 4 years when this administration was in before, of course, things are maybe a little bit different, but in those 4 years, the dollar was flat to lower and not higher. And so that one maybe kind of caught me by a surprise and maybe more of a function of some of the other things that are going on outside the world and maybe not as much just a U.S. specific thing. But again, on all these fronts, some big moves. And so now I guess for us as traders, the question is, which of these trends do you jump on and which of them do you start to fade? And I think that's where it starts to get interesting.
Well, let's see what's interesting out here this week, listeners, shall we? Let's go to the upside first. Let's lighten up our screens to the green this week, listeners. Let's do a top 10 here first. And it's interesting looking at the magnitude of our top and bottom 10. They seem eerily similar. I mean, they might have a little bit more in terms of percentage move to the tippity top of the green here this week, listeners, but they're all pretty close, all things considered. To the upside we go first. The number 10 this week, listeners, we have Platinum, the Jan contract, up about 2.5%. So that's kind of our barometer to break into the top 10 this week. Platinum. So a little bit of the shiny stuff. After taking a bit of a drubbing, post-election, as it seemed like maybe the tumult, the concern, the flight to quality, or the race to these types of assets that people tend to flock to when things are uncertain. It seemed like that maybe was coming off a little bit. Now we're starting to see Platinum get some of the shine back on, at least up to 2.5% this week in the Jan contract. Number 9, right above it, we have Canola, the Jan contract. Don't talk about that too often here on the show, but sneaking in there this week, up 3.1%. Number 8, listeners, we have our old pal going back to dairy. In fact, we got a few dairy here. Cash Settled Cheese, listeners, up 3.31%. That's also the Jan contract. In fact, looks like, well, we got about half Jan and half Decent, with a little bit of March sneaking in here as well this week, listeners. If that's not enough dairy for you, number 7, listeners, Dry Way, the Jan contract there as well, up nearly 3.5% this week. Number 7, keeping things precious, it is silver, going out to March this time. So a little bit longer term silver. It's the March contract, up 3.59% this week. And then you know what? Not enough dairy, listeners. We've got number 5 here. We've got Class 3 milk up 3.77%. Then pretty much the rest of the top 5, the top 4 really, are all crypto. 4 and 3, we've got Bitcoin, the micro, and the big futures up 4.4%. And the top 2 finally catching up, maybe making up for lost time, listeners. We've got the Ether micro and big futures up about 13.8 and 13.9%. on the week, respectively. If you've been interested in that outperformance or maybe lack thereof we've seen with ETH versus some of the other crypto assets out there, make sure you check out our crypto rundown program. That has been a big facet of our analysis out there of late. So maybe this is the week where ETH finally playing some catch up. Mr. Rich, I know you watched a little bit of crypto. Let's start there. What are your thoughts on kind of ETH blowing the doors off everything this week? Is this kind of just playing catch up with everything else right now? And what are your thoughts on the general underperformance we've seen over the course of this past year of ETH versus pretty much every other major crypto asset, Rich?
Yeah, I'll have to admit to you, it really didn't make sense to me why it had been lagging by so much. We certainly, you could point to maybe a little bit more institutional demand. In Bitcoin, obviously, Bitcoin had a massive ETF launch. You had the halving going on in Bitcoin as well. So you had catalysts on both the demand and supply front. But to me, ETH was always the place that was kind of interesting, especially I thought, thinking about it, if the election was going to be a catalyst, because yes, you could talk about maybe Bitcoin reserve assets, things of that nature, but ultimately, I thought the thing that was really being unlocked was a regulatory unleashing, which was going to spur more entrepreneurism and development within the crypto space, and that development historically has been done on Ethernet, on the Ether chain, because it's just a better place to develop apps. And even the president himself, I mean, he's with the NFTs, et cetera, leans a little bit more towards the Ether network versus Bitcoin. So I'm not surprised to see it finally playing some catch up here. And I guess we just, the stat I came across in the last week or so, we've seen more dollars flow into Ether ETFs than Bitcoin ETFs for the first time that we, this year for sure. So I think it's catching up. I understand more why I think it's catching up than why it was lagging. And I think it could be set to continue. Not a negative comment on Bitcoin itself. Obviously we're at a big number here. You're going to imagine that you're going to have a little bit of sideways price action as we kind of churn through some orders in and around 100,000. But I do think there's probably a little bit more upside potential in Ether here, just because I think some of the drivers are there. And now we're starting to see some demand drivers come in into even some of the institutional and retail products. So I think that, to me, that one is making more sense now than it has all year, because I frankly couldn't really figure out, as many people as I asked, why has it lagged so much.
Well, yeah, a lot of people asking that same question all year long, Mr. Rich, so you're certainly not alone. Is there anything else catching your eye in our top 10? Are you a huge dairy guy? If so, Rich, you got 3 of our top 10 this week to sink your teeth into, pun intended.
You know what? I am not a dairy guy at all. I've written about some dairy stuff in the past, but I didn't write about any dairy trades this year in the Excel with options, and so I have not really kept my eye too much on dairy. But it looks to me like, perhaps we've got some changes here in the supply demand so the supply and demand markets, if you will, across the dairy vertical, and that's maybe something I want to dig into, of what's going on here with milk, whey, and cheese. It's an interesting one. When you were reading it, I was not expecting to see so much dairy up there, so that's kind of interesting.
Something to bring up at Hogwarts in your next session, sir.
Absolutely.
Going on in dairy. The kids love it. All over dairy, I hear. The kids can't get enough of, some of the meme stocks, and of course, all things dairy. This is well known, and a little bit of crypto there on the side as well. Let's keep rolling to the dark side we go, listeners, aka what's lighting up our screens in the red direction this week, listeners. Number 10, we've got wheat, so we're going out to the ags first. The March contract off 2.15%. Number 9, keeping it in ags, but going to the livestock, it is the February lean hogs contract off 2.27%. Number 8, keeping it in the ags. A lot of ags on the red this week, listeners. It's soybean oil, the Jan contract off 2.34%. Number 7, going out to Midwest Steel, the Gies contract off 2.56%. Number 6, back off to the old New York Harbor, the heating oil, listeners. The Jan contract off 2.6%. And then number 5, right back to the ags. It is our old pal, hard red wheat, the March contract, listeners, off 3.31%. Number 4, again, ag dominated this week, listeners. We've got OJ, the Jan contract here, off 3.43%. Number 3, getting into Rich's neck of the woods in FX with the Brazilian real, the Jan contract off 3.64%. Number 2, that's why I've said all of our vol views listeners should tune into the futures rundown. The VIX futures have been lighting it up in both directions. This week it is to the downside, off nearly 5%. 4.94%. I know, cover your ears, those of you who are offended when you hear a percent of a percent, which is what VIX is at the end of the day. But you know what? Let's make your peace with it. I did a long time ago. And then our number 1 loser / red / dark side, but whatever you want to call it out here, listeners. Because, of course, obviously, if you're short it, you could still win. But it is lighting up our tape to the red this week, listeners. It is Nat Gas, the Jan contract, giving up the ghost, off nearly 13%. This week, so they are coming for Nat Gas. Rich, we've always joked about TWIFO. It seems like it's just energy dominated these days because Nat Gas is almost inescapable. Now Nat Gas making its way into the futures rundown this week as well, getting annihilated in a time when it's usually pretty seasonally strong. What's catching your eye out there, sir?
Well, I mean, Nat Gas, you can't ignore that move there, right? I mean, I know Nat Gas has been coming off of a pretty big run it's had really for the last couple of months, from below 2 up to 3.5 or so. So some of this, it seems like it's maybe give back, from a bit of a nice run that it's had. But the fact that it's done it when it's, when we've got some unseasonably cold weather right now, to your point, is a little bit interesting. So I think but maybe this is falling a little bit more into the drill baby drill type of scenario, and more of an election play too, if we're going to see more pipelines and potentially more production that's going to introduce a little bit more natural gas. Seems a little early for that, so that's kind of interesting. The ag seeing the continued weakness, like I talked about before, like, obviously wheat and Mexico is a big importer, and we talk tariffs there. You look at soybean oil is obviously big driver. Biofuels and demand has been a big driver there. So maybe a little bit of that unwind. And so, you're seeing some of those things don't don't seem so surprising from that standpoint. And heating oil, I think maybe there's some of that same natural gas. We've had a bit of a run on some cold weather, and now we're getting a pullback. So I think those, you can maybe explain some of those things that we're seeing there. But of course, seeing that move in the VIX is not. It's interesting, and I guess that kind of feeds it right into this seasonality where we're just seeing. We obviously saw a big vol crush after the election, and now I can't imagine there's a lot of traders that are looking to be long optionality here into the end of the year and in December. Not typically around the holidays is not typically a great time to own options, and so you're seeing a lot of those kind of holiday shortened weeks priced out of the volatility markets for sure.
Well, we talked about some energy. We talked a little bit of ag, some crypto. Anything else maybe not listed in our winners and losers here this week that caught your eye on your trading screens this week, sir?
Well, I mean, to me, I think the biggest, the most interesting thing to me, I think that I 10-year treasury yields are always, to me, the number one thing I want to look at. It's the first thing you look at in the day, just to kind of get a sense of what people are thinking there. Where the market was, the bond vigilantes were a little bit concerned, regardless of who won going into the election, and seeing those yields back up. And what was it going to stop at 4.5? Was it going to keep going? That to me was going to be an interesting potential catalyst in other markets. The fact that they're back down below 4.2%. Is interesting. Now we've gotten, like I said, the Treasury Secretary nominee has probably helped on that front, as well as some safe haven demand from problems that are going on in France and South Korea. So there's some other drivers there, but I think that's one of the interesting markets for people to keep their eyes on, not just right now, but as we go into Q1, Q2. I mean, there's a massive wall of treasury issuance that we're going to be facing next year. And so what's going to happen with that kind of core benchmark yield upon which every other asset, whether it's futures curves or it's equity or it's corporate debt or it's other sovereign debt, I mean, everything is based off of 10-year treasury yields. And so I'm always trying to keep my eye on that. It's had some big moves lately. And so I think that is the one to keep an eye on for sure.
We talked about what's moving this week. Let's see what you folks are actually trading. Let's look at our top 10 most active futures as of this point in the show, listeners. We did curate this list a little bit, so we removed some of the micros and some of the other tiny contracts that are a little bit distortive out here, so we can kind of get a little bit more of a true picture of what you folks are up to out here right now. Number 10 today, listeners, we have the Ultra T-Bond, the March contract, about 250,000 contracts on the tape there. So that's kind of your baseline. It's what it costs you to break into the top 10 as of right now, this portion of the show, listeners. Number 9, we're going from rates all the way out to energy to crude oil, in particular the Jan contract. 287,000 of the Jan WTI contracts on the tape already today. Number 8, right back to the rates, this time for 3 months SOFR, the Gies contract, 388,000 contracts there. Did you enjoy our 3-month SOFR spectacular that we did for Thanksgiving? What better Thanksgiving treat is there for you listeners than to go deep into all things SOFR? Carly Garner bravely joined me on that journey last week. Hey, don't blame me if you're not a SOFR guy or gal. You folks asked for it. We brought the heat. Probably have to do a part 2 and a part 3 down the road as well, because there's a lot to really sink your teeth into. But we squeezed as much as we could into half an hour on all things SOFR. But hopefully you folks enjoyed that. Number 8 this week, 3-month SOFR, the Gies contract, 388,000. Number 7, off to the equities we go. This time is to the NASDAQ 100, the E-mini out there, the Gies contract. 397,000 contracts on the tape. Number 6, back to the rates. 30-year T-bond March this time. 401,000 contracts on the tape there. Number 5, keeping it in the rates. It's the Ultra 10-year, also out to March. 505,000 contracts on the tape there. Number 4, keeping it in rates. To the 2-year we go. The March contract, 687,000 contracts on the tape there. Number 3, back to equities. It's the S&P E-mini, all the way out to Gies. Not that far, listeners. You know how equities are. They're all about the near-dated these days. 812,000 contracts on the tape there. The rest of our top 2, all rates all the time. Number 2, the 5-year, the March contract, 957,000 contracts. We've had a few guests come on and express surprise at just how robust the 5-year is, yet it continues to make it into the top 2, if not the top 3, on a regular basis. And number 1, you know what it is, the big dog. It's the 10-year, the bellwether for a lot of you in terms of what you keep an eye on and how you view the yield curve and how you view the rates markets. The 10-year note, the March contract, 1.62 million contracts on the tape already. So as expected, 10-year notes, a banger once again. And you know what's always a banger, listeners? It's your questions. Let's get some of those now as we dive on into the futures free-for-all.
Ring the bell. It's time to take on all comers in an epic Q&A battle royale. All questions can enter, but none can leave without an answer. It's time for the Futures Free-for-All.
All right, let's get to it. You folks have not been shy about sending in your questions on the futures market. Keep them coming. You know where to find us, at Options on most major social media platforms. Questions at theoptionsinsider.com. Also works if you're in the pro. Of course, you can use the members hotline. We love you all out there. Let's go out here first. Let's go to Charles. Just Charles. No crazy handle. Just Charles. He wants to know, any thoughts on the impact of Trump's proposed tariffs on the dollar and the FX market heading into 2025? Any trades or trends we should be looking out for? Rich, you really cut your teeth in the FX market out there, so I can't think of a better person to tackle this question from Charles. Obviously, international trade very much on the docket with the Trump administration coming in. Charles wants to know if there's any trades or trends we should be looking for with the impending threat of tariffs and the impact on the dollar, sir.
Yeah, it's a great question, Charles. I mean, and we don't have a lot of different sort of data points to kind of point to, even though we've had tariffs from just about every president for the last 100 years. But I guess the one that most people look at is kind of the similar situation to what Reagan faced with Japan in the early 80s. And I think a lot of people are pointing to China and Japan as being in very similar situations with their balance sheet recession that they have right now, and how they want to try to export their way out of their problems, and how the big trading partners of those mercantilist countries push back with some tariffs. And we saw that with Reagan in 100% tariffs on Japanese semiconductors and autos, et cetera, in the 80s. And now we're seeing that with what Trump is proposing as well. The tariff response to mercantilist countries wanting to export their way out of troubles is not surprising. The question, though, is what happens to the dollar? Well, in the early 80s, when that happened, the dollar actually initially strengthened, and it wasn't until we got the Plaza Accord in 1985 where the dollar meaningfully started to sell off, particularly against the Japanese yen. So, we had a little bit of an FX Accord at that point that kind of really changed the tone of things. I think right now, when you think about it, like I mentioned before, I think it's a little bit surprising that to see the strength of the dollar that we have seen. I mean, I think some people kind of correlate America first or an American-centric trade policy with maybe a stronger dollar, but that also means that also might mean that there's people that have less. Ultimately, it will have less. If there's less trade with foreign counterparties, there's less dollars that they have to recycle into U.S. capital markets, and ultimately, it's the relative return of U.S. capital markets, whether it be fixed income or equities, that ultimately drive what's going on in the dollars and in the dollar. So I think, to me, I would say, as we saw in 2016 to 2020, the dollar generally tended to weaken a little bit. I think I would expect the dollar to move in the other direction and not be strengthening so much. But again, I don't know if it's all necessarily about just Trump's proposed trade tariffs, because we do have governments collapsing in places like South Korea and France, and I don't think we can ignore that. And we have definitely seen some safe haven flows into things like the Treasury, and even things like U.S. equities on a relative basis are preferred when things are having troubles around the world. And so I think we've gotten some flows into U.S. markets because of troubles elsewhere. So I think a lot of the dollar move personally has a lot more to do with what's going on elsewhere than what's going on here in terms of Trump's tariffs, because to me, ultimately, there isn't really a big meaningful impact from tariffs on either dollar, et cetera. But if there was some, I would think it would be ultimately a little bit weaker. For FX markets overall, I mean, if you're looking at the euro, you've got to be focusing on what's going on in France, in the budget debates, et cetera, because that's a movie that's going to play out in a number of different countries around Europe. And so you got to have that has to be impacting your view on the euro, and that same thing's playing out in the UK right now. And so you really have to. FX is always a relative value trade. If you're preferring dollars, what are you kind of taking on the other side of that? And right now, I think it might be just that there's so many other things going on out there that people would prefer to be in dollars versus euros, sterling, yen, et cetera. So I think it's just a relative value preference and less to do with the tariffs, probably.
Well, you brought up what has kind of been the surprise of the week. You're right. Governments melting down across the board. I don't think anyone had martial law in Korea on their bingo card coming into this week, Rich. The French thing's been a little bit more of a known unknown, but they're still also unraveling over there as well. So two governments certainly circling the drain out there as we speak, which kind of led to our question of the week this week, Rich. We posted this just yesterday. We said, hey, South Korea just declared martial law. Is this a tempest in a teapot or a symptom of more surprise volatility to come this year? Quite simply, as we post this yesterday, VIX was floating around the 13.5 level. We said, do you think VIX will close higher or lower at the end of the year? So above 13.5, below 13.5, or two extra options. Who cares? I'm in crypto, or who cares? I'm in cash. And coming into the start of the show, Rich, our audience was kind of fighting. Exactly 50% said they were thinking it was going to be higher. 43.3% said it's going to be lower. Then we have a tie for third between who cares I'm in crypto and who cares I'm in cash, both with a little over 3%. Mr. Rich, do you agree with what our audience is selling? Or do you think maybe vol is going to continue to erode throughout the end of the year, sir?
I look at I look at it, and I think perhaps this is just, one of many dominoes that could be kind of falling. We've already had a lot of geopolitical risk, and it hasn't really spurred the VIX as much as I would have thought. If this were happening early next year, I might think that it's going to impact the VIX, and I would kind of vote in that higher category. But I just think that the seasonal influences on traders not wanting to pay a lot of time decay right now, because markets tend to be a lot more quiet, less liquid. And when you look at the SPX realized volatility over the last 2 weeks is like 5. It's like the lowest of the year. You're not making your time decay back scalping futures right now. And I think that near-term impact and the fact that people want to get paid a bonus, they want to be able to buy the GI Joe with a Kung Fu grip. I just think that I think that's going to be too overwhelming, and I would think that the VIX is going to struggle to move or to stay higher through the end of the year. Into next year. Yeah, like I said, I think that the French situation is just the first of many in Europe to worry about. And yeah, I definitely didn't see that coming in South Korea. So what else could be going on that we're not even thinking about? The unknown unknowns, as Rumsfeld would say. Those are always vol events, and so I think that's something that we have to kind of keep in mind too.
Every kid wants the GI Joe with the Kung Fu grip. That's the hot toy this year, Mr. Rich. So.
Every year it is, right? Should be.
Have your fingers on the pulse. I agree with you. That should indeed be the hot toy every year. Can't get enough G.I. Joes with the Kung Fu grip. It looks like our audience, we asked them last week, Rich. This was right around the Thanksgiving holiday as well. Looks like they're feeling this market because we asked them last week. The market at the time seemed to be having a hard time maintaining the 6,000 level. In fact, we were below it as we posted this last week. We asked you quite simply, will SPX close above 6,000 at the end of the year? Heck yes, hell no, or who cares I'm in crypto and who cares I'm in cash? And heck yes, took it, Rich. Nearly 61% of the audience, about 24% saying hell no, nearly 9% for who cares I'm in crypto, and a little over 6% saying who cares I'm in cash. So Rich, our audience, they're feeling the upside in the S&P, which as of right now is the right answer. We are north of it yet again, sir.
It's tough. It's like I said, it's tough to fight that seasonality. It's tough to fight that momentum. And with vols lower, that's going to be getting people putting more and more risk on the books because the value at risk has to be pushed back up, their VAR. And so that's just going to lead to more momentum into things that have been working. And then that's been long markets, right? In some way, shape, or form, and it's not just long SPX, it's long Nasdaq and Russell. So I think it's good to see that. Hopefully, they all have that position on and not just voting in the poll. But yeah, we might see this continuation in at least into December expiration. After that, people might want to take off risk and let the last couple of weeks roll out. But yeah, it's that again, it's tough to fight that positive drift right now.
Tough to fight the market indeed. Well, listeners, that music means we come to the end of our futures rundown for this week. Man, we covered a lot of ground. Metals, energy, equities, ags, a whole bunch of FX, some vol sprinkled in there. What more can you ask for in an episode here, listeners? And Mr. Rich, if folks want some more, maybe they want to go check out the Hogwarts for derivatives traders for themselves. Where should they go? What should they do, sir?
Well, on the X platform, you can find me at Excell Richard. But I do write a lot more about futures and options markets and for the CME, the Excel with Options. So go to the CME group and you can find the Excel with Options link there and sign up and subscribe to that. We talk about different futures markets and different potential trade setups. And the next one coming out is my 2024 year in review, where I go back and I look at all my trades and say, what did I get right and what did I get wrong? I think that's a good thing for all traders to do, is to kind of go back and assess the performance and try to improve upon that. And so those are the best places to find me. And then I have my own Substack. If you are a Substack reader, you can find it. It's called Stay Vigilant. So that's the last place where you can find me for some content.
I like that. We'll have to bring you back on to talk about your year in review. You're right. It is always good to look back and see how things perform. Any surprises that may have come across your trading screen, those are always informative as well. In the meantime, you can check him out in all of the places he just mentioned, listeners, if you too want to get a handle on a little bit of defense of the dark arts in the derivatives world. Then check out everything Rich has going over there. And while you're checking things out online, check out our friends over there at CTS Futures. They're easy to find, just ctsfutures.com. Their platform, of course, is the T4 Futures and Options platform there. They're easy to find. Even if you don't go to that URL, if you just type CTS Futures or T4 Futures into Google, you can sign up over there, get a free month. It's pretty easy. Costs you literally nothing. You can kick the tires and light the fires on all the cool stuff they have to offer there. So if you want to thank them for supporting the show that's been coming to you now for a few months, man, already 2 months in the can for this show, hard to believe. Head on over there to ctsfutures.com, kick the tires and light the fires. That's going to do it for us on the network today. Back again tomorrow with our usual doubleheader, kicking things off with the Flow Master and our friends over there at SIBO, talking all things option block. After that, we're back. If you're listening to this show, you should definitely be checking out This Week in Futures Options, where we talk the options side of the futures market with our friends over there at CME and all sorts of special guests. Friday, of course, volatility views. So if you like that little bit of a touch on all things VIX, we go deep into that on Vol Views every Friday. And of course, we're back one final time exclusively for our pro members with Options Oddities. Who's going to join me to break down all the wild options paper this week? Well, you got to tune in to find out. Only place you can get that, of course, theoptionsinsider.com/pro. Then we're off for the weekend. Back again next week, all the way through to next Wednesday. Another episode of the Futures Rundown. Stay safe out there, everybody.
Thank you for tuning in to the Futures Rundown, proudly sponsored by T4 Futures and Options. Experience the T4 Futures and Options trading platform with its seamless desktop and mobile applications, low latency, and professional functionality tailored for traders and brokers alike. Take advantage of T4 theoretical sheets, strategy solver, MBO, advanced charts, and much more. Empower your trading journey with T4 Futures and Options. Visit ctsfutures.com or search for T4 Futures and Options on Google to register and get a free month. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.